Assalamu alaikum. Good afternoon, everyone. Hope you are fine. And now I started my presentation is monetary policy of Bangladesh Bank. In this course number is 305, and I also respect my honorable course teacher Shadat Hussain sir. So now I start my presentation. Here the presentation is a four topic is summary of the monetary policy and tools of the Bangladesh Bank, and second one is significant change compared to the previous policy, and the last one is suggested policy reform. So the summary of the monetary policy. Bangladesh Bank released the monetary policy statement of the first half of the fiscal year in 2024 to 2025. In July 2024, MPS is firm against the bank dropped the percent of inflation pressure, foreign exchange market voluntary, and in the need of the suggest economic growth. So, the primary objective inflation control. Bangladesh Bank aimed to bring the inflation down to the around 6.5 by the end of 25 in the line of the medium term target economic growth. While combining inflation, the central bank also seek to maintain the balanced approach to ensure economic activities continue without undue contract. And last one is exchange rate stability. In response to BDT depreciation pressures, Bangladesh Bank is committed to maintain the foreign exchange voluntary via policy states. The current monetary policy is classified the contractuary inflation. The central bank intend to contain the inflation and manage the external sector. And the step two in the second topic is significant change compared to the previous year. Here we can see that policy rate in 24 and 25. Here the last year in 24 is policy rate is 8%, and they are say that in this 25 is 0.5% is increases, and similarly standing deposit facilities is 6.5%, and it's similarly increases 5% they are assumed, and the standing leading facilities is 9.5%, and those are the 0.5% increases similarly. So the policy rate hike of 50 basis policy signal and strong anti-inflationary stance in H1 and 25. This building upon the incrementing target from the policy half year. Credit growth target. Um, Private sector credit growth is target at 9.8, down from 10.9% in 24. The reduction account for the expected impact of credit demand due to rising the interest rate. Exchange rate management. Here the exchange rate management allow to control the depreciation and appreciation of Bangladesh taka in a response to market fundamental while spiritually voluntary. Additional policy adjustment. Here the refer to additional policy adjustment is open market operation highlights Bangladesh Bank intent to reduce the exchange liquidity and improve transmission efficiency. And the third topic is tools use Bangladesh Bank. Here the Bangladesh Bank use combining of direct and indirect structure to implement monetary policy. Here policy rate. Here are the two types of monetary policy is those are repo rate and reserve repo rate. Repo rate, the rate of which Bangladesh lend to bank arise making borrowing cluster and thereby slowing down inflation pressures. And reserve repo rate, The rate which Bangladesh Bank brought formed commercial bank to absorb the excess liquidity. And second one is open market operation. Its short form is OMO. The involve buying and seller in the government securities to inflation liquidity in the banking system. Sales drain in the liquidity purchase inject it. And structural reserve requirement. Here the reserve requirement is the two types of requirement, and those are the CRR and SLR. Here the CRR means cash reserve requirement, and SLR is structural liquidity ratio. Here the cash reserve ratio is monetary reserve commercial bank must keep with Bangladesh Bank. Mandatory in the some quantity of money is must be kept in Bangladesh Bank is the rules of the CRR, and the second one is minimum liquidity asset holding that banking must maintain the inflation and their liquidity capacity. That means commercial bank must be hold some amount of money and quantity of money in their account is liquidity cash, so that they are maintain the inflation. And interest rate corridor. Interest corridor is Bangladesh Bank has implemented structural IRC with repo as the midpoint, and SLF is the silencing, and SDF is floor. To guide short-term interest rate and stability the money market. Exchange rate policy. The crowning the base of a market base and manage the exchange rate had replaced the earlier more rigid involvement and offering the both flexibility and stability. And now, lastly, I describe the suggesting policy reform. Here, the strategy, the central bank autonomy. And central bank autonomy aimed the Bangladesh Bank Order in 1972 to priority of price stability as the primary mandate, following the model like ECB and Bank of England. Justification. Greater independence will enable Bangladesh Bank to respond effectively to economic shock without undue political interference. Improving monetary policy transmission, develop deeper money market and the improve financial literacy to enhance the transmission of policy rate. For example, India monetary policy framework agreement and South Korea use of real-time repo action. Here the third one is reduce non-performing loan. That means and reduce non-performing loan enforce structural loan classification, increase the provision and enhance supervision over site. Dead point. And non-performing loan ratio is state owner bank remain above 20%. Distributing credit allocation, enhancing the transparency and communication. Publish quarterly monetary report, inflecting outlook and maintain the consistency. Commercial communication channel with the public. Global practice. US Federal Reserve and Bank of England regularly publish the minutes and forecast to improve market understanding and reduce uncertainty. And last one is financial market development. Here, promote development to secondary market for government security, expand to repo market and ensure the use of interest rate derivative. And this will improve policy rate transmission and depth the monetary policy tool. Lastly, I can say that Bangladesh Bank latest MPS for 2025 reflect a determined approach to bring inflation under control while maintain exchange rate risks and maintain a degree of economic moments. However, without structural reform, particularly in the areas of policy transmission, bank governments, and central bank independence, the effectiveness of the monetary policy will remain consistent. Thank you, everyone. Now I end my presentation. Assalamu alaikum.